Hey, welcome everyone. Tom from Park Avenue Trading, your chief dealer, keeping you sane in insane markets, introducing you to also professional trading techniques. Nobody does this stuff. I'm the only guy. I'm your man. Spread it far and wide. Remember, if you like what you see, smash the like button, subscribe, and get on over to Park Avenue Trading. Get yourself a free ebook. You're not going to regret it. You're going to love it. Welcome to September 29th, 2024. It's not really September 29th. I'm actually doing this video on the 28th, so that's why I still have the same clothes on. Not that that really makes a difference. I work from home. Sometimes I wear the same shirt a few days in a row. My girl thinks, she thinks this is disgusting. I'm like, but where am I going? I don't go anywhere. I'm not sweating. I'm not really doing anything, but I digress. But anyway, this is, how to read market structure, advanced / basic and advanced, and we're still continuing with top lock, bottom lock. So I told you in the last video what we're going to do is we're going to break down top lock, bottom lock, working with the dailies, going down to the 4 hours. Maybe we can go down to 1 hour as well. And excuse me, I don't ever inhale cigars, and I just got a puff of smoke. So I just puff on cigars. I don't inhale. But anyway, so looking at Euro Australia here, this is the dailies. This is actually Friday's close right there. So I'm looking at this and I'm saying, well, I really don't have an indication that's very close. The bottom lock I have actually occurred right here. 1, 2, 3, 4. This close, right, was greater than all 4 previous closes before it right here. And it's also a close greater than 4 bars back. So that was the first indication that the marketplace was going up. And it worked very nicely at that time. So let's put a line there, okay? Let me shut that off, or else it's going to be putting arrows where I don't want them. That was the first indication that this marketplace was moving higher, right? Or it was the first indication. The market does not have to do anything. But this time it worked out very, very well. And, within 1, 2, 3 days, 4 days, it made the top, and then it started to cool off a little bit. So where was the first indication that the marketplace was, going back down? Where was the top lock? Well, I'm looking for the first close that's less than close 4 bars before, or all previous 4 bars. That's dealer's choice. That's up to you. Let's look at this one. 1, 2, 3, 4. It's not. This one. 1, 2, 3, 4. No, it's actually this guy right here. 1, 2, 3, 4. This close is less than the close 4 bars before, and it also happens to be less than all. So really, right here was the top lock. Right now, we went over that in the other video where there's 3 indications. There's the top lock itself, there's the high bars close, and then there's the ultimate high, right? Same thing on this bottom here. Okay, there's the low bar actually is down here, the close of the low bars right there. You could use that. Even though this was the first indication upward, you could say, all right, it actually matches this low bar close. It's kind of interesting, but I'm trying to be mechanical. Once you start learning these systems, you'll start to learn that there are some nuances that you can play with that make sense and that they do work. But in order to have a system, it needs to be mechanical. So you stick with the mechanical parts of it. Like when you're developing something, it has to be, strict amount of criteria that has to be used. You can't really start going into gray areas, So this bar basically was the first indication that this bottom was locked. So you would have this bottom plus this close, and then this close. They're equal, so they're all there, and they all fit the mechanical criteria. So I just want to make sure that you see that. But really, at this point, the top block is like way up here, right? So let's put that up there. And if you would have known that on that time, you had a pretty good indication that Euro Australia was heading lower. How much lower? Well, you're looking for this pivot low here. Well, it broke that. So now you're looking for like down in here, like 150, 160, right? And also, I mean, if we go back in time, let's see how much further we go. If there's anything lower in the near past, there isn't really. This is like for a long time that has been basically the low, and it's okay. I mean, if it breaks that and it's going lower, and we'll handle some of that with the Fibonacci video, which I haven't done yet. But anyway, so here we are as we stand right now. The only thing that we have right now with the top lock, bottom lock, is that we have the bottom lock from here. This is actually now acting as resistance. Okay. Now, if the marketplace turns and goes up through this and starts using this as support, the structure is changing. Okay. It doesn't necessarily mean we still have this area up here as the ultimate top block, the ultimate resistance. Okay. But, you don't want to stand in front of a freight train if this thing starts coming up here and starts using it as like a support point, because now you're going to be looking for the first close greater than all four previous closes to basically reset a bottom lock. And it may happen right at this point. It may like very well happen right there. Okay, it may do it. I don't know. I don't know the future, right? If I knew the future, I wouldn't be sitting here teaching you guys this stuff. This is all indications, right? So what I'm getting at right now is that I have to go to a smaller time frame chart. I have to go to, I could use a 6 hour, because on TradingView you have the ability to do 6 hours. But what I'll do is I'll do like the standard MT4 thing, where I think that you can go to a 4 hour chart. So I'll go to a 4 hour chart, and we'll take it from there. We can use these levels, but also on the 4 hour chart, we can make our own new top lock, bottom locks. Okay, so hang on one second. All right, look at this. I went to the 4 hour. Now this is where it gets like, oh wow, pretty amazing. The top lock occurred on the 4 hour on this 4 hour bar. 1, 2, 3, 4. This close is less than all four previous closes, and it's also less than the close 4 bars before. It happened exactly at the bottom lock's point from the dailies. Wow. All right. So if you were trading, if you had that point marked off for the dailies and you saw the marketplace basically coming through it, you could have, you're trading a 4 hour chart, you go, oh shoot, I'm going to take this close right here is closing below this. All right, now I need the queen to confirm, which is this bar itself showing more weakness. But I could take this sell right here at 162.78. My stop has to be like 163.30, 163.33. That's a really low risk sale, right? And the marketplace moved down so far to 161.18. So you definitely had like a 2.5 hour gain on that for the day. That's pretty damn good. So here we stand right now with where the marketplace is, and it's basically saying, when I go back to the dailies, well, look, we'll do the market structure again. Okay, this low that I'm going to point to the screen so that like you're behind me and you could see me do this. This low really is the lower low. If this low breaks, it's showing more weakness. Okay, it's showing weakness again. So that's the market structure, and I'm going to go back to the days and we're going to look at that. So hang on one second. Okay, so this level was actually the 4 hour top lock. It was the old daily bottom lock. I did not plan it. I mean, I'm I'll never, bullshit you people. I mean, it's amazing that it happened at that point. It's really cool because it kind of solidifies like the idea I'm trying to get across to you. But here we go. If we're looking at market structure, like the previous video, we got a high, we got a low, we got a lower high, and now here's our deeper low. Market structure, a market law says that if this low point goes, the marketplace is going lower. Where's it going to? Well, we said that we were going back to like over here, right? Like 160. Right now it's trading at like 160.69. So the plan would be like, and we're gonna go over that today. We're gonna go over a trigger that we could use. Obviously, the best thing to do would be to wait for a retrace to try to sell it. Okay, but sometimes we don't get those retraces, and there's a lot of people with trigger fingers, man. They just want to get in, and I'm one of those guys. I'm kind of like, when I see something, but the problem that I have is that I've been watching markets so long that I can actually see like what it's gonna go in. Now, anybody who's a part of my trading room can attest to this. I am always notoriously early. I am notoriously early. If I take a sale, if my clients in the trading room wait 5-10 minutes, they're going to invariably get a better sale price than me, at least by 20 ticks. Now I generally use like a 50-point stop, so they'll get a better trade off than me, because I see it happening. I jump in because I'm programmed. My treasurer used to scream all the time, "You got to be in the effing train before the train moves. Don't wait. Why are you waiting? What's the difference between, 10 and 25? If you want to sell, you sell 10s. What's the big deal? There's no big difference. If you think that the marketplace is going down 100 more points, there's no difference between 10 and 25. But if you're only looking to try to, grab 15 points, well, then there's a difference. But I don't trade for 10 or 15 points. I try to trade for at least 100 points. I don't always get 100 points. Sometimes I get 300 points, 400 points. Yeah. I've had many 15-hour gains in there, and I'm not here to talk about that. But the point is, if you're a scalper, and you really can't scalp with this stuff. I mean, you can't make the price. The true definition of a scalper is a person that bids 10 and offers at 12. Somebody pays him at 12 and somebody hits him at 10. There you make your 2 pips. Okay, but you can't participate in a market like that. You have no ability to be a market maker. And I really think that the next evolution of brokers should be that you're allowed to do that. You're allowed to join the bid and join the offer. So like you can make the spread just like a bank does. Now, will they ever do it? Probably not, because that's really their edge too. Like, they're not just making commissions. Some of these brokers are actually trading against you, not the reputable ones. But there are some shady brokers out there that do. But I really think that would be cool. And, when I left banking in like 2007, but in 1999, there was something called the EBS machine, electronic brokering system. And it replaced all the voice brokers, because it was called the machine. The machine was so much cheaper than having a voice broker. Like a voice broker would charge $12 per every 1 million pound that you traded. But the machine would charge $2.50 for every 1 million pound that you traded. Now it went down ridiculously, probably lower. I don't even know what it is now. But also, that machine used to speak. So it was electronic voice going, 10 bid, 12 offered, 10 12, 10 12, just like a voice broker. I'm shocked that they have not come out with that yet. I predict that there will be a platform that comes out with a talking platform so that everybody gets to hear the prices. So if you go to make a sandwich and you're hearing 10 bid, 10 given, 10 bid, 10 given, 9, 10, 9, 11, 9 given, 11 paid, 11 bid, 12 bid, 12 paid, 12, 13, 13 paid, 12 choice. If you start, it helps instead of like always having a, like, as you're putting the mayo on the sandwich, running back, looking at the chart. Where is it? It was 10 bid. Oh, what the fuck? It was just 10 bid. Now it's 25 bid. What happened? There is no what happened. It is just the market, All right. So I went way off into the weeds with that. Why? I don't even know. But anyway, so this is the point really right now where the market structure could change. All right. So if we break this low, market structure says we're going lower. All right. As long as we don't have an A, B, C, D correction. That's that, there's always as long as we don't, right? As long as we don't have an A, B, C, D correction. So here we are right now. So let me go down into the 1 hour charts and see what we got with the 1 hours. Okay, so hang on. Okay, so here's the 1 hour. All right, and the 1 hour gave the top lock signal also basically at the same exact price. Okay, and now I'm going to be looking for a bottom lock to see where the bottom lock broke, because that could be also now new resistance. If it's truly a bearish marketplace, it's going to act as resistance. So that could be the level that we'd want to look at to counter trade against. So let me find that. First, let me hit the loo and come right back. All right, so I'm scanning this chart here, right? So the original 1 hour top lock happened here. I'm looking for a bottom lock just to see what happened. Right here's a bottom lock. Okay, that kind of held for a while, and then it broke and over here. So let's see if we can find a top lock. Well, this one's definitely a top lock. So that would, it's kind of far away. 162.49, that's not really helping us. So let's see here. Wait a second. 1, 2, 3, 4. No, it's right here. That's like the top lock right there, 161, so 92-ish. All right, so that would probably be, if you want to sell against it, that's where I'd be looking, using top lock, bottom lock, where I'd be looking to basically sell. All right, now, with a stop loss, it's got to be kind of high around here now. All right, so 162.20. So it's like a 30-point stop. So it's not so bad. Now, what is the indicator that I want to introduce you to that is a trigger that you could use? All right, and I have to caution you with it because it's really supposed to be for daily charts. And anytime that you take like a daily and you start applying it to lower time frames, it kind of loses its efficacy a little bit. But if we're using it in terms of top lock, bottom lock, all right, and let's say, for instance, we had the daily, we had the 4 hour come up here, we had the 1 hour come up here, and the marketplace basically is, sitting right here was the occurrence of the top lock. It also matched the daily old bottom lock, so it should be resistance, and the 4 hour also came in at this price. So at this point, we could say, all right, look, I don't want to wait for the next hour. I want to pull the trigger, man. I want to get involved, but I want some type of confirmation to tell me that, hey, it's okay to get involved. Well, what we're going to do is we're going to use very similar to 3-bar harmony, right? but it's going to be reversed a little bit. All right. So we're not using 3 bar, we're using 8 bar. All right. So we're going to use 8 bars. So here we are right here. Let's say this marketplace closes right here. All right. You're going to go back in time. You're going to count 8 bars back. So you're going to go 1, 2, 3, 4, 5, 6, 7, 8. What's the lowest low in all of the 8 bars? Well, it's actually this bar right there. That is your trigger point. You have the top lock coming on the 4 hour. You got the old daily bottom lock resistance. You got the 1 hour. Actually, the 1 hour didn't trigger yet. So you're using this is for the 4 hour on the 1 hour. Okay. You would sell this low. Right there. You would sell that. The trigger is for a sale. You sell the low of the lowest of the 8 bars. For a buy, you would buy the high of the highest of the 8 bars. So, for instance, let's see if we can find one. Well, here's one right here, right? So if I'm looking at this bar right here, if I go back 8, 1, 1, 2, 3, 4, 5, 6, 7. It includes this bar. So it's this bar plus 7. So it's total of 8. So it's like n plus 1 for statistics. So it's like 1, 2, 3, 4, 5, 6, 7. Okay, so it's 8, right? So right now, that's the highest high we got for 8 bars. Marketplace comes down a little bit. Once it pierces this top, right there, that is a buy signal with a stop loss down here. Okay, it's a simple entry technique, and you could use it with top lock, bottom lock. I wanted to get to it because now it's generally used. It's generally used for dailies. Okay, and you don't need top lock. You could use it with top lock, bottom lock. It works really well with Fibonacci. In the Fibonacci webinar, I'm going to be going over that more. But I wanted to introduce it to you here. So, do we cover everything? It's 22 minutes in. Yeah, I'm gonna leave this here. I don't know if it's lacking anywhere. If it's lacking, I'll cover it in Fibonacci when I start doing the Fibonacci video. I'll probably be doing that tomorrow. I don't think I'm gonna be doing it today. I will have another shirt on. If it's the same shirt, then I'm doing it tonight. But so let's just review, okay? A buy trigger is now this is a point right here. It has nothing to do with top lock, bottom lock, anything like that. But it is the lowest bar of all previous 7 bars, including this one. This is number 8, right? The top of this bar basically is a buy trigger. So you would buy a breakout at the top of this bar. Stop loss has to be, the bottom of the low, right? And you got a little bit out of it. If you're looking for 40 points, this is something you can grab. I mean, it's not bad. It's not bad. It's not exactly. I mean, it's right on the hourly. I think percentage-wise, it's like 47% of the time. So it's not great. But when you combine it with top lock, bottom lock, it's better. It's like 55%, okay, of the time. So top lock, bottom lock adds to this. Sometimes, you can get runs of like the thing 70%, right? Market is just, market's in a, this is why market's really in a bullish turn. It's in a bullish wave, okay? Yet it has its natural reaction down. And then it forms an 8 bar low, but the tendency of the marketplace is to go up. It's bullish. So therefore, when it breaks the top of that, it just runs, and then also it creates a bottom lock. Within 4 bars or something, it creates the bottom lock, and you're already in on the low bars high. You're already in. You can't beat that. That's really good. So I hope that this is please leave some comments. If you like this stuff, you want more of it, say, hey, this is great. I want to learn more. I have tons of shit. I mean, tons of stuff. And head on over to Park Avenue Trading. Get you right there. You head over to Park Avenue Trading. You right there. You smack the like button, please. You smack the subscribe. Hey, don't forget to ring the bell. And always remember, enjoy the party, but dance near the door. I'll see you in the next video. Cheers.